Good morning, everyone. It is Thursday, July 29th, and this is Nadex Morning Analysis, where we look at some potential hotspots in the markets for the day. Here at Nadex, my name is Todd Rich. With me from Keep Trading Simple, Brian Caprice. Before Brian and I jump into it, I need to quickly share this disclaimer, as all of these sessions are sponsored by our compliance department. Trading involves risk and may not be appropriate for everyone. Any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So what are we looking at today? We've got a few things that are going on. I wanted to switch my chart over here. First, let's take a look at some of these Forex pairs. But as I fiddle around to bring up some Forex pairs, following yesterday's Fed FOMC announcement, what have we seen? We've seen the dollar getting hammered. You can see that in this chart. Dollar in the second position, chart just going up and to the right. So we've seen the U.S. dollar getting clipped. We've seen this morning we had GDP that came in. U.S. GDP came in below expectations. Jobless claims came in higher than expectations. So things are starting to cool a bit. So that is why we are seeing the U.S. dollar getting hit a bit. So let's run through some currency pairs. I'm going to flip it over to Brian, and then we can also take a peek over at gold, another place. I think I had that up there for a second, but it did finally break out of that range. We said it might break out of the range yesterday. It finally has broken out of its range. But Brian, I'm going to flip it over to you, and let's talk about the U.S. economy and what's happening to the U.S. dollar.
Yeah. So in the overnight, the last couple of days, we've mentioned that there hasn't been a lot of movement. Today, there's been a ton. Obviously, while we've had pound strength has been the overlying kind of trend, what we've seen thus far this week. Today, it's absolutely dollar weakness, without doubt. Euro dollar down 79, pound dollar down 86, dollar yen down 41, dollar Swiss 77, which is a big number. Dollar CAD down 119. That's a huge number for the dollar CAD. Aussie dollar up 58, and then Euro pound 4, pound yen 38. So, and again, it's retracing a little bit right now. So everything has really been dollar based, and we mentioned that yesterday. That the FOMC note, they're obviously notes weren't. They're not going to change anything. But some of the things we saw out of is really what's kind of dominating the market right now. And you can see here, this article was actually written on Daily FX, so it went from Forex back to Daily FX. But some of the highlights that they mentioned in there, obviously, just in case anybody was wondering, inflation is transitory. He had to say it again. Couldn't have that speech without saying it. It's kind of like his tagline now. We're going to get Powell T-shirts that say, inflation is transitory. It's like, if there's any Star Trek fans out there, what is it? Resistance is futile. Transition.
Nice.
Inflation is transitory is what we're going with right now. But some of the things that he mentioned in here that kind of threw kind of currency traders and just market traders in general off. He mentioned that we're still a ways away to go for substantial job growth, and I'm not exactly sure kind of what he's looking for or like how in touch with the small business he is out there. But that's the exact opposite of what I've been hearing in some of the reports we've seen. But he mentioned that we haven't hit that substantial. It's obviously working. Long-term inflation is transitory again. He said long-term inflation expectations in line with the goal. Kind of surprised because remember, as we're accelerating past, right, we're going at a substantially higher rate. To get back to where it needs to go, it means it needs to drop down and kind of go, a little bit negative from where it was. I'm not sure how he thinks people are going to start charging people less for things, but that's Powell. So just overall, it was a dovish tone, and again, not necessarily surprised by that one. And there's a couple other things. So if you guys get a chance, go over there, and it should be easy to find this one, the U.S. dollar outlook, and it whipsaws. The reaction, and again, a lot of this is just it's people dissecting. When you look at, it talks about how some of the verbiage here, upon scrutinizing exact verbiage of the statement, however, market discovered the key substantial qualifier was left out. So you got to understand, these statements don't actually give us the precise, this is what it's going to be type scenario.
Right.
It's always, it's like the Bible, right? The Bible was not written in English. It was translated many, many times by a bunch of people, right? I always joked, it was like, yeah, these are monks, but don't monks have like the honey wine and all that stuff? And then they're doing the translating. Like, is it, there's always that question there. Is it the exact, meaning, because there's always something, and then it gets lost in translation, right? Things don't always translate correctly. So people are translating this and trying to figure out what is it they're thinking. But overall, it's kind of the same trends that we've seen. Again, inflation is transitory. We are expecting it to be long. We knew this was going to happen. And again, this is what the reaction was off of the FOMC notes. And this is just till the end of the year, the U.S. session, till 5 o'clock. So, I mean, this all happened within like 3 hours. I actually have it moved back a little bit because I wanted you to see the big spike up. But, there's FOMC. So the dollar movement was absolutely huge. You can see it's one of the biggest things. And
Yep.
European session slowed down, Asian session slowed down. But as soon as the Europeans jumped on, they started to push it down as well. And now we've had basing since about 5, 6 o'clock this morning. It is an area where we saw previous buyers, and now we're starting to get into some chop. But this is an absolutely huge move in the dollar, and it's something they need to watch out for. Now, we talked about a couple different trade setups yesterday and actually the rest earlier in the week. Here is one of them. This is the Aussie dollar. And we mentioned that we had these kind of 3 blue areas, and we've hit it here, and it worked out well. The next one came down, touched it here, and you can see it touched it a third time before coming through and basing. And we talked about this, that most likely it was going to collapse the next time through, and it did. It collapsed, it came back up, and then it spiked. This was FOMC yet again. And we mentioned we were hoping the price, and it's funny, I drew the black line here. I was like, listen, I'd love to be down here for FOMC. I really feel like they're going to mention something that's going to be very weak. And it's funny, it's right on the dot. I'll move it to the side, you can see it. We literally came right down to that zone, that 73.16 in a spike, and then rallied all the way back up again. And you can see it did a little bit of basing in here, but these 3 zones were pretty much spent after being hit a number of times here. And now we've rallied all the way back up. Now, I want to go through this real, quick enough. As you guys are taking these trades, that should actually be a green, and I'll explain why. Typically, when you're taking a position, especially with a news spike, you're looking for it to go to an opposing area of buyers and sellers. We had marked off this level here, right? The 73.68 or 86. And that the rationale between that the 73.86 was if price for some reason was able to spike up there before the release, then just like we were looking to go long here, we would have been looking to go short. But with further analysis, when it dropped down and touched that level, all of a sudden we were bulls looking for ways to get out of the trade. Well, there was a 1 candle top push to the downside. There's your target for that position. You can see it hit it, it dropped down, and then kind of went back lower. And then again, the Europeans kind of in the overnight decided they wanted to jump on board as well. Very, very small risk in this trade. Again, it was about 8 pips worth of risk. Again, very, very small. And it was about 65, 66 in the other direction. So you guys can do the math on that one, risk versus reward. But right now, again, these have been pushed through, and you can see that other kind of entry up there, it also kind of based in front. So right now, with as much movement as we've had, it's not like the Australian currency is the driving factor in this. It's not like it's the driving force, right? Today's number, they don't necessarily help that. And when I say today's number, this is what I mean. The advanced GDP number is well below the expectation, as well as the unemployment claims were higher. But again, you see this, and all I do is my news feed with all kind of news during the day is nothing but how people aren't losing their jobs. People are leaving their jobs to go work across the street because that guy's going to pay $15,000 more a year because he can't find employees. Last night, my men's league for lacrosse, I work with a physical therapist, and he said the same thing. He's like, I just can't get people to work for me. I'm going to hire an assistant. I'm so busy right now. I just can't find people to work. He's like, I don't want to be that guy to steal from other people, but that's the reality right now. Employers are like, right. I'm going to steal from somebody else because it's supply and demand. I'll pay him more to come work for me because I need the bodies. So it's funny that I have parents on my son's team that they own a bunch of different restaurants. Actually, 2 different parents. They said the same thing. My wife's angry because Tuesdays, her favorite sushi place, doesn't have the employees, so they have to close on Tuesdays now to give employees a day off. So not exactly sure what Pal's looking like. Maybe he's only talking about, like, I don't know, Target or large, gigantic stores, but every small store, it's the same story. They can't find people to work. But again, that's where it's coming in. And, you're seeing the price index, and again, advanced GDP price index, basically meaning the cost of goods and services for things that are included in the GDP. Magically, they're higher again. So again, I'm not exactly sure what Powell's reading off of. I don't know if he prepared these statements this time last year and is reading them now, but they don't match up with what we're seeing in the markets. Obviously, you're like, hey, inflation's here, but you're
Right.
not doing
We're
anything.
seeing it. We're seeing it show up, but we're also seeing the economy cool down a little bit as well. You know,
I
with
don't know because, again, look at the earnings. Yum Brands. If anybody knows who Yum Brands is, Pizza Hut, Taco Bell. They said their business is absolutely exploding right now.
yeah,
So
yeah.
it's
Well,
hard when
so
I've
was
seen.
McDonald's. Their earnings blew them out of the water, right?
Yeah, I don't see Apple blew it out. Boeing blew it out. So where is the economy that's struggling right now?
Well,
It's
yeah.
just not there.
Well, actually, I guess the argument could be, well, then you could stand to pay your employees a little bit more,
Well, we are seeing average earnings go up, not to where they
and
should
so
be
you're starting to
probably,
see
but
that, right?
yeah. And
Which is
here's the
going
other
to
one.
drive inflation, right? That is inflation too. So,
Yeah, it's all
uh,
inflation, and again, it's
right.
transitory. So yeah. Suddenly, Taco Bell blowing their earnings out now. They're going to make the prices cheaper for us because we don't want those tacos anymore. Here is the other one, the euro dollar. Again, the euro dollar tends to be the go-to for a lot of traders for any type of big U.S. based news release. It's the most traded asset that exists in the world. A lot of people think it's the S&P. It's actually the euro dollar by like a millionfold.
Yes.
Same thing. Yesterday we talked about, and again, remember the purple is the knockout bracket. We saw a level down here. We had marked it off, and I said, same thing. If price was able to kind of grind down, and it's funny, it actually ground away from the level, and then all of a sudden collapsed right into it, right at FOMC time, and took off. Now this one was another one of those ones, and we had drawn this over here. If we can get down there for FOMC, we're looking for a spike through the top. Kind of the same scenario, right? It was about 8 pips worth of risk. It's opposing zone. Again, there was one here that we could have used, or you could use the top one. Either one of those two levels would have worked. Based off this risk level, if we take it just to the first one, that's a 1 to 8.4 risk to reward ratio, meaning for every one that you risk, you make 8 on the other side. If you held this still, because again, remember, knockouts, they're not time-based. They expire on Friday, but it's not Friday yet.
Nope,
This
you got
one is
another day.
and again, I'm taking this from the top of the zone, guys. I checked it. You can look at it right now. This knockout still exists. If you don't believe me that I put this on there, please go check yesterday's recording.
Actually, here, watch. Yeah, and you know what? I wanted to do this quickly. We can actually see it on the chart where I'm going to have to do this a little bit so people can see it even better. If I can do this, it's kind of hard because it was actually it was a wick. It was just a little wick here. It got down to about 3 or 4 pips from getting knocked out, which is crazy. I mean, that is a very, very long wick. But then it immediately came back and has since gone a little bit higher.
Yeah, I mean, it's 106 pip higher. So 8 pips risk for making 106 in the other direction if you still had the position on.
Yeah.
Nice risk to reward ratio trade. And that's what it takes. Now, a lot of people will ask, like, well, what if I couldn't be there at 2 o'clock? How would I trade this? Great. You can put a working order in. You're able to put one of those working orders in there to set it to where it's an acceptable risk level for you, that if it gets down to that level, bam, it goes ahead and buys it. I mean, this is, again, a lot of people, this is one of those things that people don't understand in trading. It's not just about market orders where you're like, oh, I'm buying or selling right now. You can do your homework ahead of time. You don't need to be there. And again, the gentleman that came up with the set and forget phrase, he actually passed away yesterday. But again, it almost becomes set and forget. If it did nothing, right? Say it went from, say you love this zone. You attend these sessions. You're like, you know what? I accept the responsibility for this trade. I like it. I would be interested in trading that. But it's all the way up here, right? You could have tried to time it, right? But you're like, oh, wait, it's all the way. Here, let me move that away. You could say, listen, price is there right now, right? It's not where I want it to be. All right, I just can't take the trade. You could say that, but you could say, I like this trade. You could have said it all the way back here that, yeah, I like that knockout. It's acceptable level risk. You could have put an order in here that when price got down to a specific, say, $15, $10, $20, I would be willing to take that trade. What would have happened is as price pulled away, nothing would have happened, right? If it had gone from here at FOMC straight up, guess what? You never would have got triggered for the trade. Nothing would have happened. But when it did spike down, and again, you could have been grabbing some potato chips, grabbing whatever you want, a sandwich. As it came down, you would have came back and realized that, oh my God, actually, it's even probably less time than that. Here, you can see, right? Here's where the statement came out. it tagged it, and within 15 minutes, it was already back up again, and you had put in about 40 pips worth of work on that one.
And remember, you're not always looking just to pick the very, very bottom. I mean, no one ever picks the bottom price when they buy, and they don't pick the top price when they sell. But you know where approximately you would be willing to take that risk, and you could place that order in, and you would have gotten a fill because it would have spiked through your price. You would have filled,
I
and
mean, in worst case scenario, remember, you accepted the risk. So if it did this, if it went from here all the way
you knew
down,
you're in for.
and you had put a working order in that said, I'm going to risk, I'm going to risk, there's my level of risk. I'm going to risk $15 or $20 for this position. If it went through, guess what? You lost. But that's trading. You have to take risk in every single trade. Without the risk, there is no reward. But again, think of it this way. If every one of my trades, if I'm looking to make this much, right? And this goes back to the simple math that we've mentioned a few times. If I'm looking to make 3 times what I risk on every single trade, how often do you need to be right? Answer is 26% of the time, right? So yeah, could this have gone through and you lost? Yeah, it could have absolutely happened. But if you had done it here and say it did go through and you lost that one, but you had done the same thing over here and this one did not get stopped out, guess what? You lost your one over there, you made your 3 over here, you're still up +2, and you're only a 50% trader for the day.
Yep.
So again, it's all about managing your positions, having acceptable levels of risk. And again, I didn't have a crystal ball to put either of these two zones off, but you guys can see, I mean, they've both been there the entire week. So, yep, those are those. And then again, gold, same exact thing. If you guys remember,
broke
again,
out. Finally, it broke out.
It did, yeah. And I was praying for this. I was like, come on, you can do it. Break out. The yellow square, the yellow circle is where we were yesterday. One of the things I told you is I would not be surprised to see this break out. Why? Because these are the European session opens, right? We saw it drop in the European session, rise in the U.S. session, drop in the European session, rise in the U.S. session, drop. This one base now, and this one kind of pulled up. We had dropped yesterday into a level where we saw buyers, and we mentioned, hey, listen, this is a decent level. If we could stay here for FOMC, this would be a good buying. Well, guess what? There happened to be a knockout at 1792. The price started to pull away, just like we talked about, and we said typically, it's done by about 12 o'clock. This one pulled up, and all it did was for FOMC, it dropped down again. That knockout is still alive. You can check it in the system. And then we finally went up. We based in that level, which again, you had your 1, 2, 3 hits. We expected it to break through. It did. It based, and then has continued to push. And now it is basing in the upper one. Again, we mentioned that these two extremes, the 1823 and the 1782, were both amazing levels. But again, this is another great runner. Even if you took the entry from the top of there, it's up about $33. So its peak, $32.70 from that time frame. And again, you can still use the same risk to reward tool if you wanted to. You could say, hey, listen, there's my risk level. Again, the knockout was sitting right at the backside, and there's my opposing zone. That's a 1 to a 3.19. And again, if you've been holding it, if we can get some trailing stops in Nadex, this will be even cooler. But I keep hearing it's working.
In due course.
We're working on it.
We're
working on it. But again,
we do keep adding a lot of functionality, so I'll give you that.
Yeah.
I have to say that.
It's going in. Working orders is my next one. Trailing stops is the
trailing
next
stops would be a great one. Yeah.
If we could, but even so, guys, if you close us out at the end of the business day yesterday, again, there's your 1, there's your 3 on gold. It finally broke out. Now, again, the question is, are we going to just take this level, right? Are we going to take this level here, and is this going to become the new level up here? Is the big question. And I do expect this to roll back a little bit again. They mentioned inflation is there. Jobs numbers don't necessarily help it too much. And again, I said the one big warning yesterday was if COVID comes out or if they're mentioning COVID again. Although I forget what article it is. I think it's in the FOMC article here. They do mention COVID, and they say that Powell has also mentioned that while successive waves of COVID-19 are having diminishing impact on the economy, basically meaning it's not closing down, they're going about their regular business. It's still a risk, obviously, but it's not the same risk that it used to be. It used to be that people are becoming not tolerant of COVID, but like the news is not affecting us as much. We're still going out. We're buying lots of Pizza Hut and Taco Bell, according to Yum Brands. Everything. We're buying airplanes. We're buying Taco Bell. We're buying pizza. We're buying.
It's
buying Apple.
regional.
We're buying a lot of iPhones, right? Yeah. We're buying a lot of iPhones as well. So. Got to get up there and keep up with the Joneses.
Yeah, with the COVID, I think it's regional where they're having some hot spots, and so
It is, and it's not going
Nationally,
away. So it's one
it's
of
not
those
going
things that
away, and they got a new
yeah.
variant now.
Mhm.
Beyond the Lambda one in Texas, there's
Mhm.
a new variant now in Florida. They haven't given it a letter yet. They got it a number. It's
I talked
coming up.
about this yesterday with a couple people, and they were like, "We're going to run out of letters." I was like, "No, it's going to become like hurricanes. Every single year with hurricanes, they start over again. That comes up with different names. It's going to be the
Yeah.
same thing. I mean, got to realize, guys, every year there's new strains of the flu. It's the same thing. It's a virus. This is what viruses do. It's natural. It's not like this is unnatural or whatever. This is what viruses do. They mutate and they change.
This
Bacteria,
one,
same
this one,
exact way. Bacteria does
unfortunately,
the same thing too.
is putting people in the hospital and in the grave at
Well,
a
yeah,
much higher
yeah.
rate.
Well, I mean, people die of the
Young
flu too,
people,
so it's
young
just not as
people,
many.
middle-aged
Yeah,
people. So
yeah.
yeah,
It
it's
does to everybody.
so yeah, it does depend where you are. I think
Mhm.
you're right. I just noticed a comment. I think we're becoming desensitized to it. It's
Mhm.
becoming normal. It's sort of in Chicago for 100 years. Gangs of, I mean, Al Capone did it 100 years ago. Bang
Mm.
bang, Al Capone. Chicago's now desensitized to
To
the
gang
violence.
violence. I don't know about that. I don't live in Chicago, but maybe. I don't think you could ever be desensitized to that one.
I
But no,
don't know.
it's
Somehow it just seemed to have come that way. It's
yeah.
kind
Well,
of
I mean,
crazy.
it's the same thing. You know, whenever we see the same again, and I'll leave it at this one because we got to get going because it's 9:06. But it's the same thing. You know, like oil is continuing to rise higher and higher and higher, right? You know, seeing gas prices where they are now, the first time gas hit $4 a gallon, it was an absolutely huge deal. People were talking about, I'm not driving anymore. I'm taking public transportation. I'm not doing this. Now, again, depending on where you're in the United States, it's not horrible. Where I mean, it's like 3.30, and I can say it's not horrible, but that was really, really bad. I mean, I have students that live in California that say it's $4.75. Like, I wouldn't leave my house. I mean, not because of COVID, because of gas. I'm like, I'm not going to pay 4.75. I love my SUV and things like that. You know, but that's what
Well,
happened. You become desensitized over time to this one. So that's why I'm saying this transitory inflation, I think, is complete BS. If we're spending this X number of dollars right now, they're not going to be like, hey, listen, our costs are cheaper. We're going to lower it. No, we're used to paying the prices that we're paying now. It's not going backwards. So I'm not sure why transitory inflation is actually a real thing. So
all right.
I'm going to leave it at that. It's 9:07, guys. Get ready for the open today.
Yeah, we do have to get ready for the open. I got to bring this back up though, real quickly. All right. With that, we're having a fun chat this morning too. With that, any questions for Nadex, please email us customerservice@nadex.com. Any questions for Brian? You want to get in on any questions for him? Please email him. He is very accessible. Hit him up at support@keeptradingsimple.com. And a quick recap of what we kind of discussed today. We've got following the FOMC and the U.S. economic data. We are seeing we've seen the U.S. dollar get hammered a bit lately. Uh, Part of that too, with the GDP coming in below expectations, jobless claims above expectations. There's been some volatility in the U.S. dollar, and then we did see gold finally break out of that channel. It had been stuck there for a while. So we'll take a look. Gold might be a hot spot. Maybe it'll start moving around again. We will catch you again tomorrow morning. I can't believe it's Friday and we're coming up on the end of July. Uh, Getting surreal. I can't believe we're coming into August. And with that, we will catch you tomorrow morning. And good luck in the markets, everyone. Thanks.